This new 15% proposed tax could put a lot of short-term rental operators out of business. Let me explain. Now, I'm going to be reading the bill because I want to make sure I share as accurately as possible. And here's exactly what it says. California Senate Bill 584 passed in the Senate Chamber of Commerce on Wednesday, 27 yeses to 11 noes, and has been ordered to the Assembly. If passed in the Assembly, the bill will enact the Labor Force Housing Financing Act starting January 1st, 2025. So again, if this were to pass, hopefully it doesn't, it will start in January 1st of 2025, wherein a 15% tax would be imposed on the rental price of short-term rentals. For example, if your nightly rate on your Airbnb is priced at a total of $400, meaning like $200 for a Friday and $200 for a Saturday for a total of $400, the tax would tack on a $60 charge. So instead of you receiving 97% of that $400 because Airbnb takes 3% from the host, now you would get charged that 3% from Airbnb on the $400 plus this new 15%, which that 15% would go towards funding affordable housing. So now you got 3% plus 15%, we're at 18%. Now, here's where it gets really crazy, right? We're already paying a TOT of 13 or 14%, depending on where you are. 3% plus 15% is 18%. Plus 13, that's 31%. The challenge I see with this is, a lot of short-term rental operators are operating at a 15 to 40% profit margin, just depending on what's going on and how it is that their business is structured. This could literally put a lot of short-term rental operators completely out of business to the point where it may not even make sense to operate short-term rentals in certain areas. Not only that, it would make it very difficult to compete with hotels. Like, one of the biggest reasons why people have stayed at Airbnbs is because it is so much more affordable, right? If you have 10 people, a group of people going to a conference or whatever, a wedding, and they need to get 3 or 4 rooms at a hotel at $300 each, you're looking at $900 to $1,200 plus the 22% occupancy fee. They're paying a lot of money. So staying at an Airbnb, like a single family home that's got 4 bedrooms and 3 bathrooms with a pool, jacuzzi, and a game room, maybe it only goes for $500 a night. So it's like a third. But now you start adding this 13, 14% transient occupancy tax and this 15% bill that they have proposed. Those fees really start going up where, it may create a tipping point where some people are like, you know what? I used to stay at a lot of Airbnbs because I used to save money. But now, I might as well just stay at a hotel. And I feel like that will happen in certain areas, not everywhere. I think short-term rentals are still more affordable, in my opinion, and they still provide a way better experience. But let's continue. The bill defines labor housing as housing that, among other things, is owned and managed by specific entities solely for the benefit of residents and households unable to afford market rent, and whose residents enjoy certain protections. For districts that implement transient occupancy tax, TOT, Mammoth's is 14%. The bill could have drastic financial consequences. That 2-night $400 rental in Mammoth would cost you an extra $116 in TOT and SB 584 fees, which is the bill being proposed, a 29% charge. And that doesn't include the cleaning fee. Well, the cleaning fee does come out of the guest, but still. Yeah, see, on the guest, this is a lot. And we have the options of paying all these fees as the host, or we could pass these fees on to the guest. The problem I see is that if we pass these fees on to the guest would now pay the 13 or 14% TOT, the 15% new bill, SB 584, but on top of that, Airbnb charges the guest 14%. So they're going to be paying, say, $200 for Friday, $200 for Saturday, plus 14% on top of that for Airbnb's fee, plus 13 or 14% for a TOT, transient occupancy tax, plus 15% for the SB 84 Housing Affordable Act. Man, these fees are really starting to add up. It says, if a property owner already has slim margins to work with, say the property was an investment they are paying off through partially short-term rentals, then that extra 15% could cripple the equation and force the property owner to default and abandon the enterprise. I agree. The mathematics equation will likely dampen real estate values. I agree. It may also make property owners more willing to rent long-term, which is probably the state's hope. It's likely that they want more properties to go back to long-term tenants, and so they're just imposing these ridiculous taxes to make it not worth it anymore, right? I really think this is probably the wrong way to go about it, said John Morris, Mammoth Lakes Tourist Board's lodging representative and treasurer director of operations at Snow Creek Resort. Morris's take, there are other ways to raise funds for affordable housing. For example, a bunch of money from TOT gets put back into the parcel and other housing affordable projects here in the town every year, he said. I think that makes more sense. I mean, I get it. I realize that there is a big issue in California. But Morris is certainly not in favor of the bill. To basically go and throw another 15% on short-term rentals, it doubles our taxes on the property, said Lehman. In many cases, that's going to take the profitability away. 100%, I agree with that. When it comes to property owners converting this 15%, Lehman said, I can tell you what a lot of other people are going to do. They're probably going to start lying about it and start doing short-term rentals under the table. Whether or not the bill would destroy resort economies or create more workforce housing remains to be seen. What's pretty visible, though, is that local property players consider the bill a bad idea. I agree. SB 584 was introduced by Santa Barbara's Democrat Monique Limon. Thank you, Monique. What do you guys think so far? Is this something that you guys think is a good idea? Is this a bad idea? Let me know your thoughts in the comments down below. And by the way, guys, if you haven't yet subscribed or turned on the notification, make sure you guys do that now. Now, I want to go over a video that I found, so let's watch this together.
California lawmakers are considering a new bill that would tax short-term rentals.
Senate Bill 584 would impose a 15% tax on rental properties. CBS 8's Rocio de la Fe tells us how lawmakers are hoping to use that tax to fund more affordable housing.
Senate Bill 584 is being proposed by lawmakers as a way to address the state's housing crisis. And while those for the bill say the short-term rental tax would fund affordable and workforce housing, rental companies like Airbnb say it would only hurt the state's tourism economy.
Guys, we are in a recession. Interest rates are still like 6, 7, 8% depending on what type of loans you do. And one of the things that a lot of people don't realize is that when you increase interest rates, people stop spending as much money because, one, when you increase interest rates, a lot of companies start going out of business, their margins get thin, they start letting go people and employment goes up. And now there is less stimulation in the economy because people don't have as much money to spend. And short-term rentals are already down 10, 15% in many areas of the US because of the recession. So adding these additional taxes, if it's passed on to the guest, right, it's going to be very expensive for people to stay at Airbnbs. And hotels are already very expensive because of all their fees. So this would, I feel like in many ways, this would create a negative impact in the economy. So let's continue.
Senator Monique Limon is proposing the tax on short-term rentals.
Our vacation rental market is something that has increased quite significantly in the last decade, and to the point that it has now a vested role in a lot of our communities, particularly in areas that are tourist attractions in the state.
Limon says SB 584 is part of a broader conversation about funding sources for affordable and workforce housing.
Trying to identify what kinds of investments in the form of an assessment to vacation rentals should come out to also keep dealing with some of our hardest issues in the state.
The bill would impose a 15% statewide tax on people staying at short-term rentals. That's in addition to existing transient occupancy taxes. The tax would not apply to hotels. The proposal has faced some pushback from companies like Airbnb.
This always comes down to a lot of politics. I wouldn't be surprised if all these big hotel brand operators and owners are the ones funding the politicians to then impose this tax, because what it would do is it would create a wealth transfer. Like, here's the thing, guys. Airbnb is the largest hotel in the world by far. even though they don't own any hotels, right? So what this is going to create is a wealth transfer and revenue transfer from short-term rentals back to hotels. So it makes a lot of sense. But again, what do you guys think? Is that a possibility that hotels are the ones paying the politicians to impose this bill? What do you guys think? Please, I really want to know in the comments. I'm going to be in there conversing with you guys, so let me know.
It says the bill would create an unfair advantage for hotels, making it harder for local hosts to compete. Adding rental prices would increase significantly. In a statement, Airbnb says SB 584 impacts regular Californians who share their home to make extra money to keep up with the rising costs.
Yes, there's people out there that have, like myself, right, that have multiple properties, and this is like a legitimate business that we operate. I mean, we make over $1 million a year from our Airbnbs. At the same time, there's a lot, and probably the vast majority of short-term rental operators only have one listing or maybe a second listing. And there's a big portion of people that the listings that they have are inside of their homes, and they rent out one bedroom or maybe an office room that they turned into a bedroom. And they did it out of necessity to be able to cover their mortgage payment. And for many of them, this is the only way they can cover their mortgage, especially if they took out a mortgage in 2023 or towards the second half of 2022, where the interest rates were like 5, 6, 7%. This is the only way that they could pay their mortgage. And if they, if this 15% bill passes, it's going to put them in a lot of trouble.
I spoke to several hosts who didn't want to go on camera. They tell me they're concerned about the impact the legislation could have on their business.
The bill does not eliminate any individual's opportunity to.
Okay, it doesn't eliminate the opportunity, but it does make it impossible. Politicians.
Limon says the bill aims to create money to help cities reach housing development targets.
And when housing is so limited, with housing is so unaffordable, we have to find ways to have a conversation. And since our cities lost redevelopment years ago, this is really, a version that would create a sustainable, budget-proof, it doesn't come from the general budget form, to invest in our communities to build affordable and workforce housing.
Should the bill move forward, the final vote will be in September. Lucia de la Fe, CBS 8.
So there you have it. In September, they're going to make the next decision, to the final decision as to whether or not this bill passes. I really hope it doesn't. Man, there's already so many ways that people are being taxed and businesses are being taxed that I feel like there's plenty of budget out there. I mean, I don't want to get too much into the politics, but we're sending all this money to other countries. It's like, what about our country? Like, we should fill up our own cup first and then overflow into the cups of other people. But I don't know. That's just my opinion. What do you guys think? By the way, if you guys haven't liked this video already, it did take a lot of work to put this video together. So I would really appreciate if you guys can hit that like button. In final thoughts, I believe there's other ways that affordable housing can be funded. There's plenty of other forms and taxes that are already being paid. I don't think that we should implement additional taxes because, again, it's going to make it not worth it anymore to operate short-term rentals if this bill passes. Like, it may still be worth it, but the margins are going to be so slim that we're going to be like, all right, at this point, I'm not making that much more than if I just had long-term rentals or mid-term rentals. So should I even do short-term rentals? So it's going to be really interesting what ends up happening with this Senate Bill 584. But please, guys, let me know down in the comments below. I really want to hear what you guys have to say. If there's one thing I know for sure is that I don't know everything. So let me know your feedback in the comments down below. Check out one of my other videos here before you guys go anywhere. And make sure you guys follow me on Instagram where I post every single day. See you on the next one.